So in the last class, we were discussing the topic of computing interest on capital borrowed. Whenever the capital is borrowed or whenever you take any loan for the purpose of purchase, construction, repair, renewal or reconstruction of the property, then in that case, you have to compute interest on capital borrowed. Now, how to compute that interest? That I discussed with you. So whether the property is let out property, self-occupied property, deemed to be let out property, or any other property which I couldn't occupy because of my job, profession, etc. Then in that case, calculation of interest on capital borrowed remains same. So calculation has no effect on the type of property. So the calculation is simple. Amount outstanding during the relevant previous year, if my previous year is 2020-21, then whatever is the outstanding during 2021 multiplied by rate of interest, that is the simple interest calculation. Some technical concept arises. Technical concepts arises when I am paying the interest for the period which is prior to the year in which the house is acquired or completed. That is technical point in the last lecture which I discussed. Calculation of interest is very simple. Amount outstanding during the previous year multiplied by rate of interest, that's it. However, whenever you have paid or whenever any interest is payable for the period which is prior to the year in which house is acquired or construction is completed, if there is any interest payable for this period, then you need to compute pre-construction period interest or pre-acquisition period interest. What I am saying, let me write it down for you so that you understand that what is the main thing which you should remember whenever you have to compute interest on capital borrowed. So this discussion is still continuing, discussion on interest on capital borrowed. What I am saying that how do you compute this interest? It's very simple. Suppose if your previous year is 2020-21, then in 2020-21, whatever is your amount of loan outstanding, it's very simple. Multiplied by rate of interest. That's it. There is no problem. It's very simple. The only issue arises. So what is the technical point which you should remember? If any interest is payable, if I'm saying any interest, what do I mean by any interest? Interest on loan taken for purchase, construction, repair, renewal or reconstruction of the house property for these 5 purposes. If any interest is payable for the period which is before or which is prior to the year, in which house is acquired or construction is completed. Always check for this. In case you as an assessee, you are paying any interest for this period which is before the year in which house is acquired or construction is completed. So to be more precise, if I am saying any interest, that includes only what? Interest on loan taken for purchase or interest on loan taken for construction. Because the year in which you acquire the house, or the year in which construction is completed, in that year there is no problem. For that year, you will simply compute the interest as what? Amount outstanding multiplied by rate of interest. There is no problem. The year in which the house is acquired or construction is completed, and in subsequent years there is no problem. Interest is simple, amount outstanding into rate of interest. The only problem arises for that interest which you have paid or which was payable by you for the period which is before this year in which you acquired the house or construction is completed. Because in the previous years, till the house was acquired or construction was completed, you were paying the interest in reality to the bank, but for this period, you were not claiming any deduction. Of this interest as per the provisions of Income Tax Act. That is why this period is problematic, or it is little bit technical. The moment your house is acquired, or the year in which you acquired the house or you constructed the house, you completed your construction, there is no problem. Because for that year and for subsequent years, you can every year compute annual value, and if you can compute annual value, you will deduct interest. What about that period's interest which is before the year in which I acquired the house or which is before the year in which I completed the construction? For that period there is an issue, because for this period I was paying interest because I had the loan till this period, but I was not getting any deduction. Because if the house was not complete, how can I get any deduction? So the moment house is complete, then government says or act says any interest which is payable by you for the period which is before the year of acquisition or before the year in which construction is complete, that interest we will also allow you as deduction now when you completed the house or when you purchased the house. So this period's interest is known as what? Pre-acquisition period interest, if it is for acquisition of the house, or if it is for construction of the house, then it is known as pre-construction period interest. This calculation is little bit technical but very easy, not tough. Technical in another sense. Calculation is very easy and logical also. I hope you have understood this point. This is nothing but a revision of the last class. If this is clear in your mind, please raise your hands. I'm not telling anything new. This was the same point which I discussed with you in the last extra class. Please raise your hands if it is clear. Okay. Now, so one thing is sure, that when can you check whether there is any pre-acquisition period interest or pre-construction period interest? How will you check it? You simply check if any interest is payable, and when any interest is payable, when loan is outstanding. So when there was any loan outstanding in the year which is before the year in which house is acquired or construction is completed, then you have this pre-acquisition period and pre-acquisition or pre-construction period. So I told you in the last class steps to be followed. My step 1 was that you compute this period, pre-construction period or pre-acquisition period, pre-purchase period, whatever you call. P for purchase, this middle P is for purchase or acquisition, one and the same thing. You have to first compute this period. How do we compute it? This period ends when? Can you tell me this period ends when? 31st March of the year prior to the year in which the house is acquired or in which the construction of the house is completed. This period ends on this date. I haven't told you the start of this period because there was no need to tell you the start of this period. By default, logically, when it starts from date of borrowing. Very simple. Because till you borrow, there is no interest. So it starts from date of borrowing and it ends on this date. And one thing is logical also. If suppose the date of repayment is before this 31st March, this is an ending date. But it is possible that in exceptional cases, I paid the loan, entire loan, before my house is acquired or complete. I got a lottery or I got the money from my friend. I repaid the entire loan. Always ending date of this 31st March must be compared with what? Date of repayment. There was no need to technically tell you this starting date borrowing and this point repayment. But still, for more clarity, you must remember that pre-construction period or pre-acquisition period starts from date of borrowing and ends logically on this date. But with this 31st March, logically and conceptually, you have to check what is the repayment date, because the moment you repay the loan, then there is no need to pay interest in future. So by default, this 31st March must be compared with actual date of repayment. If repayment is less than this 31st March, then pre-construction period by default ends on date of repayment. So whichever is earlier we take. This is step 1. Then I told you step 2, that whatever is the total this interest, pre-construction period interest or pre-acquisition period interest or pre-purchase period interest, do the total and divide it by 5, make 5 installments. And those installments are deductible in 5 years. Which are those years? First year is the year in which property is acquired or construction is complete. Year in which property is acquired or construction is completed. And then next 5 years, next 4 years. This was my step 2. My step 3 was very simple. Whatever is amount outstanding during the relevant previous year multiplied by ROI, rate of interest. And my step 4 was total of step 2 and step 3 for that respective previous year. Like in my course, my previous year is 21. So I will do the total of previous year 2021 value in step 2 and step 3. This is also nothing new. It is the same point which I discussed with you in the last lecture. So I'm simply repeating the point. And then So these two slides which I have discussed today is nothing new. Same discussion which happened in the last lecture. If you are still little bit not sure, then you need to revise my previous lecture. If you are sure in these two slides which I have discussed today, that means your last extra class lecture is clear. If not, you must listen to that lecture. Now, what example I did? So this is one point which you will not forget. What example I did? If you remember that example, in that example, date of borrowing was. Can you tell me what was the date of borrowing? 1st June
June
16.
2000.
Yes. Date of completion was 1st Jan 2020, and date of repayment of loan was 1st October 2020. I hope it is clear. So this was date of borrowing, this was date of completion, this was DOR. So technically, which example I discussed? When date of repayment is in the year which is after the year, which is after the year in which, can you tell me what I will write here? In which the construction was completed. If I give you a line, then you will say that I discussed with you an example in which the repayment year is what? 2021. But house completion year is what? 1920. So technically, I discussed with you in the last class an example where my repayment happens in the year. It can be any year, but it is after the year in which construction was completed. Have you understood this line which I have written here? That this case I discussed with you in the last lecture. If yes, raise your hands. Because some of you must be having some doubt that what happens when repayment is before. So that is why I wanted to give you this line, that what I discussed. I discussed an example where the repayment date of my loan is after the year in which I completed the house. So my repayment date can be before this date or even in the same year. Answer will not. There is no need to do any different calculation. The purpose of this is to show you only this confusion. That if some of you are having the confusion that what happens when repayment date is before 2019-20 or what happens when repayment date is within 1920, I wanted to tell you that nothing will change if you know the concept. So let me start applying a different example. Let me start showing you or solving a different example for you where you will understand that it does not matter where these different dates are, whether my date of repayment is before date of completion, whether my date of repayment is after date of completion, whether my date of repayment is within the same year in which the house is complete, does not matter. If you remember those 4 steps which I have explained, then any date can happen anywhere. Any date can lie at any step or any level. Answer calculation remains same. Let me show you another example now. And now you can ask me the doubts if you have any. So now I am showing you a different example. So this was my first example. And let me show you another example. So this was example 1 which I discussed with you in the last extra class. If you have not yet listened to that extra class, you must listen to it. This is my example 2 now. Now what is my example 2? Where my DOB remains same, 1st June 16. Where my DOC remains same, 1st Jan 20. But I will make a change in DOR. Let me assume that the DOR is 1st October 2019. So can you see what is happening? What is my example 2 now? I will say that when DOR is in the Can you tell me what I will write here? In the same year in which the construction of the house is completed or was completed. Because now DOR happens in 2019-20 and 19-20 is the same year in which construction is completed. No change in answer will happen. Value can change but process remains same. Now see, same steps which we should follow are step 1. First of all, always whether there will be any pre-construction period or post-construction period or not, how do you check it? How do you check it? You check it only with the help of these two lines. How do you check whether there is any pre-construction period interest or not? If any interest is payable for the period prior to the year in which the house is acquired or construction is completed, if this is the case, then you must be having pre-construction period or post-acquisition period. It is there. Now see, can you tell me in this case whether I will be having pre-construction period or not? Can you tell me whether I will be having pre-construction period or not?
Yes, sir.
Yes, I will be having. Because what I am telling you, if any interest is payable for the period which is before the year in which you completed the house. I completed the house when? In 1920. So before this means till 31st March 2019. And yes, interest was payable because I took the loan on 1st June 16. So the interest starts the moment I take the loan. So since for this period interest is payable, so one thing is sure that I will be having pre-construction period in this case. In the last example also, completion year was 1920. Now, was there any interest payable before this period? Yes. If I say 1920, that means I should ask a question to myself that was any interest payable till 31st March 19? Answer is yes. From 1st June 16 till 31st March 19, interest was payable. If payable, there will be a pre-construction period interest in any case. Same happens here. There will be a pre-construction period. So if you want to check whether there will be any pre-construction period interest or not, this is the only way to check it. Now, if I know that there is a pre-construction period interest, then what is my step 1? Compute this period. And can you tell me what will be this period? Can you tell me what will be this period? It starts from date of borrowing and it ends on which date? 31st
March 2019.
Yes, 31st March 2019. How you have derived 2019? Because 31st March prior to DOC. So prior to 1st June 20, which 31st March will come? 19. And one thing is by default, which is not necessarily needed to be written in the book also, or anywhere you might not find it. By default, you must compare this 31st March with actual repayment date. What is my repayment date? 1st October 19. So which is early? 31st March is early. This is my PCP. For this period, whatever interest I actually paid to the bank when I took a loan for constructing the house, I couldn't claim the benefit of this interest under the provisions of Income Tax Act because for this period I was not in a position to compute the annual value of the house because my house was not at all complete. That is what the simple logic is to compute pre-construction period. This is my step 1. What is step 2? That to compute the interest of this period. Compute PCPI. How do you compute it? This period. You simply write this period. It is 1617, 1718 and 1819. How much was the loan in the same example? If you remember that example, loan was, I'm discussing same example, 15 lakh. Percentage was 15%. So yearly interest was 225. Same example, I'm simply changing DOR, date of repayment, otherwise same example. Now, what is the 10 months interest? Because in 16-17 interest starts from 1st June. So 10 months interest comes out to be 187,500. I hope I am right. You can check the calculation. 17-18 entire year, and in 18-19 entire year. This is second step. Do the total. How much is this total? 637,500, and then I will do divided by 5. So each installment will be 127,500, which is deductible in 5 installments or 5 years. Which are those years? Can you tell me those years? First year will be the year in which the house is complete. Which is that year? 1920. And the next 4 years, 2021, 21-22, 22-23. I'm not concerned with all these years, but you must know the way of calculation. I'm concerned only with my previous year, which is 2021. So 127,500 is eligible to be allowed as deduction on account of interest on capital borrowed. This is pre-construction period interest. The same 2 steps I applied yesterday also in this example. Now, what is step 3? I told you step 3 is very simple. Since I'm computing the calculations for this year, can you tell me how much is outstanding during this year? Can you tell me how much is outstanding during 2021?
15 lakh.
How much? How
15
much is
lakh.
outstanding during 2021? Entire 15 lakh is outstanding. So rate is 15%. But can you tell me for how many months it was outstanding in 2021?
6th month.
अरे नहीं, इसमें तो outstanding है ही नहीं. Because I paid the entire loan on which date? 1st October 19. So technically outstanding 15 lakh का इसमें तो है ही नहीं. Nothing is outstanding. In this year, nothing is outstanding. Nothing is outstanding during the previous year 2021. So technically interest payable is nil. Interest payable in real life to the bank is nil. Previous year 20 outstanding है नहीं कुछ, interest पे कहाँ से होगा? Nil. And what is my step for final answer? So what is the total interest on capital borrow? Total IOBC for my year. What is my year? For previous year 2021 is how much? Step 2's interest for this 2021. Interest of step 2 for 2021 was 127,500. And for step 4, what is the interest for this period? Nil. So the total interest which is eligible for deduction. This is the total interest which is eligible. I don't know whether actually it will be allowed or not, but it is the eligible amount. 127,500. Please raise your hand if this calculation is clear. Yesterday's was discussed with only one change. Now the repayment date is 1 year early. That's it. Is the calculation clear? 4 steps are there. Whether step 1 or 2 are applicable or not, you need to check in your mind before attempting the question whether there will be pre-construction period or not. If any interest is payable for the period which is before the year in which house is acquired or house is constructed, that's it. If there is pre-construction period, then step 1 and 2 are applicable. If there is no pre-construction period, then only step 3 is applicable. That's it.
Sir, I have a little doubt.
Yes.
Why we didn't calculated interest after for like pre-construction period, which is start from 1st April 2019?
I have not understood your doubt. Why? What your doubt is? Why?
Sir, like we we should also have to calculate interest from 1st April 2019 to 1st October 2019.
1 अप्रैल 19 टिल 1 अक्टूबर 19। हाँ कैलकुलेट किया है, कौन कह रहा है कि नहीं कैलकुलेट किया है, पर वो ईयर मेरा नहीं था। वो ईयर कौन सा है जिसमें कैलकुलेट किया होगा? आप जो कह रहे हैं वो ठीक कह रहे हैं, मैंने इंटरेस्ट कैलकुलेट किया है, आई हैव कंप्यूटेड द इंटरेस्ट, but that is not required in my year. I have computed the interest of step 3। आप जो कह रहे हैं वो इसकी बात कर रहे हैं, but that was applicable for which previous year? 1920। 1920 में I would have computed the interest on 15 lakh rupees into 15% into 6 by 12। मैं कब कह रहा हूं कि मैंने कैलकुलेट नहीं किया? But I'm not concerned with all the years, April 19 to October to September 19। किया मैंने कैलकुलेट। और
Okay,
ये
sir, got it.
और इतना इंटरेस्ट कितना आया होगा? ये 15 लाख इंटू 15% डिवाइड बाय 12 इंटू 6, 112,500। And when I had computed the step 4, when I computed this step 4, total interest on capital borrowed for which previous year? For 1920, my answer would have been what? For step 2, what was 1920? In 1920, step 2 value was 127,500। 1920 में इतना तो प्री अलाउ होगा, इतना उस ईयर का इंटरेस्ट अलाउ होगा 112,500। In 1920, the total interest eligible for deduction was 240। किया मैंने कैलकुलेट। But why will I compute the interest in step 3 for all the years? Income tax is an yearly subject. If I am concerned about 2021, I will talk about only 2021, that's it. Point clear or not?
Yes, sir, got it.
ये कैलकुलेशन हुई है पर मुझे यहाँ जरूरत नहीं है इसकी, that is why I am not showing, but you must know that it must have been done for the previous year 1920 like this. Please raise your hand if this point is clear, or if interest calculation is now a little bit clear to you. It requires practice. Please raise your hands if this is clear. If you have not attended the yesterday's lecture, then you might not understand it. But if you have attended or listened to the yesterday's lecture, then still if you have any doubt, then you should ask me. Otherwise, there should not be any doubt left at this point of time. If you have attended the extra lecture of this interest calculation. Now last, different case. Why I am telling you these three examples is so that you must be having no confusion in your mind that whether date of repayment is before, after, in the same year, etc. It does not matter. If you know the concept, then you change the dates anywhere, doesn't matter. Now my third example, same thing I will assume. Example 3. So I'm not changing my date of borrowing, which is 1st June 16. I'm not changing my date of completion, which is 1st Jan 20. But I'm changing my date of repayment. And do you know what date of repayment I'm writing? 1st October 2018. So now I can say that this is the case when DOR is in the year which is before the year in which the house is acquired or construction is completed. So this is the third different case. The repayment date is before the year in which the house is acquired or construction is completed. So I have changed these dates. In my example 1, this date of repayment was 1st October 20. In my example 2, this date of repayment was 1st October 19. And now in my example 3, the date of repayment is 1st October 18. So technically I have covered all the cases with this. Now, same situation. First of all, just ask a question to yourself. Will there be any pre-construction period or pre-acquisition period? And what the answer is? Check. Is there any interest payable for the year which is before the year in which house is completed? So this year is which year in which house is completed? 1920. If it is the year in which house is completed, from this year onwards, I will regularly deduct my interest. So there is no pending from the tax department. But before this year, what is before this year? What do I mean by before this year? That means before March 31, 2019. And starting from DOB till this date. Yes, that means interest is payable. If it is payable, then you have to compute pre-construction period interest. So start step 1. Compute PCP. Now, can you tell me that what is PCP now? Can you tell me what is PCP now? By default, it starts from date of borrowing, and when it ends, can you tell me the ending date?
So
First
date of repayment.
2018.
31st March 2019, or what? Or what? Can
First
you tell me
October.
or what? First October 18. Because you cannot compute the interest till 31st March 19 because you paid the entire amount of loan on 1st October 18 itself. So how can you compute the interest? There was no interest payable after 1st October 18. So by default, ending date of 31st March must be compared with repayment date. And if repayment date is before 31st March of that year, then repayment date is the date when your pre-construction period ends logically. So this is my pre-construction period now. This is step 1. What is step 2? You simply compute the interest. So which are these years? 16, 17, 17, 18, 18, 19. Same amount, 15 lakh amount of loan, 15% rate, yearly interest is 2 lakh 25. Now for 16, 17 it was 10 months. So for 10 months the interest computed was 187,500. So this year complete. And can you tell me what is the interest of 18, 19 in this case? What is the interest of 18, 19?
1,12,500.
Yes, 1,12,500. Why? Because my 18, 19 ends on 1st October 18 itself. So only 6 months, first 6 months interest. Total. 525. How many installments? 5. 105. And these are deductible in which years? Can you tell me which years? 1920, 2021, 21, 22, 22, 23 and 23, 24. In these years, it is an amount which is valid. But I am concerned with only my year, 2021. Similarly, what is step 3? Step 3 is for the relevant previous year. My relevant previous year is 2021. What is outstanding in 2021? Can you tell me what is outstanding in 2021? Nil. Nothing is outstanding in 2021. If nothing is outstanding, there is no interest. Interest payable for 2021 is nil. So final answer, step 4. It is the total interest on capital borrowed. For previous year 2021, Pre-construction period interest is 1,05,000. This is step 2, pre-construction period. And current year interest, relevant year interest is nil. Total which is eligible. I'm not saying it is actually allowed as deduction, but it is eligible. This is the amount which is eligible for deduction. Whether it will be allowed or not, it depends upon what? The provisions. And do you know what are the provisions? The provisions of deduction are what? In let out, there is no limit, entire interest is allowed. In deemed to be let out, there is no limit, entire interest is allowed. But in respect of houses whose annual value is nil, as per which section? As per section 23(2), you cannot deduct entire interest. Your deduction depends upon what? Either it will be maximum 2 lakh or it will be maximum 30,000. That case I have already discussed with you in the last lecture. Now please raise your hand if interest calculation is clear. These are the only 3 different situations which can happen, and I have shown the concept. So DOR does not matter, it can lie anywhere. If you know the concept, you have to simply apply it. That's it. Please raise your hand if interest on capital borrowed is 100% clear in your mind. Hurry up, those who are having any doubt, they can ask me. Otherwise, if you have attended the previous lecture and still if you have any doubt, please ask me without any hesitation. If any doubt remains here, it will always remain there. Okay, so interest calculation is over. So if broadly you can say my chapter is over. I know how to determine annual value before deduction of local taxes. I know how to deduct local taxes. I know annual value. I know deductions under section 24. Standard deduction. I know interest on capital borrowed or no. So everything is over now. So we have to do simple numericals. Chapter is over, except some miscellaneous points. So let me wind up the miscellaneous points with you so that in the next class we can start full-fledged questions. So some miscellaneous points now. Chapter is over otherwise. So some miscellaneous provisions. So the miscellaneous provisions are: first, section 25A. What is the treatment of arrears of rent received or unrealized rent recovered? Unrealized rent is tenant which has refused to pay, but maybe I have done the court case and court says the court ruling came in my favor and the tenant paid me that unrealized rent. So how do you tax it when it is recovered? I know that what is the treatment of unrealized rent. What is the treatment of unrealized rent? Can you tell me what is the treatment of unrealized rent? When in step 2 I determine actual rent received or receivable, in that I deduct unrealized rent. This is what I have shown this to you, that I deduct unrealized rent. But when it is recovered, maybe after 5 years it is recovered, so logically it should be taxable, because had there been no unrealized rent earlier, I would not have deducted anything here. If I would not have deducted anything here, my actual rental income would have been higher. If it would have been higher, it would have been possible that I would have paid extra tax because my income from HP would have become higher. So my unrealized rent reduced my, there are chances that unrealized rent has reduced earlier my taxable house property income. So now when it is recovered, logically it should be taxable, and same happens in section 25A. Whenever any arrear of rent you received or unrealized rent recovered, that is taxable in the year in which it is earned, taxable in the year in which it is received, taxable in the year in which it is received after giving 30% deduction, after giving 30% deduction. Because had there been no unrealized rent earlier, it would have been a part of my actual rent and I would have given 30% earlier also. So by default, when you are recovering it, you simply deduct flat 30% standard deduction, and whatever is the figure, you simply add it as recovery of unrealized rent, section 25A. So whichever property you have, you will compute annual value, you will compute deductions under section 24, standard deduction and interest on capital borrowed. This is the answer. Till this discussion, I was saying that this is the answer, but no, I will add one more point. Add section 25A, recovery of unrealized rent. So I will add the recovery of unrealized rent or arrear of rent here, and now this will be known as my final income from house property. So this is the new point which I have told you now. Second thing, if you remember section 22, can you tell me the conditions of section 22 when your income is taxable under HP? Do you remember when your income is taxable under HP? What are the conditions?
Sir, when a person assessee is the owner of the house.
Yes, so the main condition was you must be the owner. But in this 25A, it is not necessary. Why? Suppose my unrealized rent was related to previous year 14-15. At that time, I was the owner. But in my year previous year 2021, what is happening is today I am receiving the recovery of this year rent. Today I am receiving the recovery of 14-15 unrealized rent, but in 2021 I am not the owner. I sold my property in 1920. I sold the property in 1920. So logically, when I am receiving this arrear, I am not the owner. Still, section 25A says to tax 25A, it is not necessary that you are the owner. Ownership now is not necessary. Ownership is not necessary now for this recovery, because there are possibilities when you are not the owner now. You were the owner when there was a resident, but after some years when it is recovered, you might have sold your property. So whosoever person receives unrealized rent recovered, it does not matter whether that person is still the owner or not, that person has to include the income under his head, income from house property, for this any unrealized rent recovery. Please raise your hand if this concept is understood. Next point. Now it is not logical, so I'm not discussing that why it is not logical. To promote simplicity, this concept has been made easy, that it is taxable in the year in which it is received after giving 30% reduction, but it is illogical. It is not correct. Around 5 to 6 years ago, there was separate provision of computing this recovery, and that was more logical, though that was technical. But that provision was logical, or I should not say more logical. That provision was the logical provision. It was correct provision, but that was difficult. So in the name of simplicity, this has become simple, but now it is illogical. It is not correct actually. So I'm not going into the details of that. That was only to tell you that so many times simplicity always doesn't mean that the things are easy or the things are correct. 25A, unrealized rent recovery, is one such provision where in the name of simplicity we are taxing it. It is simple, but it is not correct. Earlier provision was the correct provision, though that was little bit difficult. Anyhow, for your level, this much is sufficient. That what is the provision 25A. Next point. Section 26, co-owners. Now today, if a property has only one owner, suppose this property has only one owner, Mr. X, and this is self-occupied. Total interest payable is 6 lakh per year. Can you tell me how much is the income? It is a self-occupied property, so annual value is what? Nil less deduction, and or 7 lakh is the interest payable per year. Deduction under section 24. Standard deduction nil. And can you tell me how much interest I will write here? How much interest I will write?
So 2 lakh or 30,000.
Yes, depending upon the case. Very good. Now suppose I am saying that it is for construction of the house taken on or after 1st April 1999 and construction is completed within 5 years. Then can you tell me if this is the situation, how much is the reduction?
Sir, 2 lakh.
2 lakh. So I will not deduct 7 lakh, 2 lakh. So what is the income taxable in my hands? Nothing. In fact, I have 2 lakh. Now suppose there are 3 owners, Mr. X, Mr. Y, Mr. Z, all have taken joint loan, all are paying the installments. Total is still 7 lakh. Do you know what is the benefit? Every person becomes the owner now, and every person will say that annual value nil. So these three have become three different identities. Less deduction under section 24, standard deduction nil, interest on capital borrowed. Do you know now 7 lakh will be divided in 3 parts if these are equal owners, and it becomes 2 lakh 33. So everyone can claim now maximum 2 lakh. This is the benefit in co-ownership. When you are the one owner, only 2 lakh was allowed to you as deduction. Now still 2 lakh is allowed to you as deduction, but now since owners are 3 equal owners, each person can claim 2 lakh rupees. So this is the benefit in co-ownership. So it is my advice, you can ask your parents also. If your parents are planning to purchase their houses, you should ask your parents that purchase the houses in the name of co-owner. So purchase the house in joint name. Take the loan in joint name. Pay the installments with separate bank accounts. Both can claim 2 lakh each. It is tax planning, that's it. It's your choice. It is not tax evasion, it is tax planning. Please raise your hand if this point is also clear, so that I can move to the next point. Today I have to wind up this topic within 5 to 10 minutes. Hurry up. If it is clear, please raise your hands. Co-ownership is beneficial provision for the purpose of tax savings or tax planning. One owner maximum 2 lakh, 4 owners 2 lakh, 2 lakh, 2 lakh, 2 lakh. Each will claim 2 lakh. This is the benefit. Hurry up, raise your hands if co-ownership concept is clear. Next point. As we know that, third miscellaneous point, as we know that to tax the income under the head house property, this is third miscellaneous point. As we know that to tax the income under the head house property, section 22 says that you are the owner. You must be the owner. Now I want to give you an example. You tell me one thing. Mr. X transferred a property to his wife, Mrs. X, on 1st December 2020. 1st December 2020. So Mr. X was the owner for how many months? 8 months. And Mrs. X is the owner for how many months? 4 months. Rental income per month is 50,000 per month. Now can you tell me who will pay the tax on this rental income? Hurry up, can you tell me who will pay the tax on this rental income? Mr. X or Mrs. X? Any answer? Till 1st December 20, I was the owner. From 1st December 20, my wife became the owner. Tenant is still paying 50,000 per month. Now for 8 months, first 8 months, who should be the person who will pay the tax on house property income? Any answer from your side? Hurry up, any answer from your side? For first 8 months, Mr. X is the owner logically, he will pay the tax, and for next 4 months, Mrs. X the owner, she will pay the tax. There is no problem. But suppose question arises, why Mr. X has given this property to wife? If it is without adequate consideration, suppose the property's value is 20 lakh rupees, and if wife has given 20 lakh to husband, then it is genuine transfer, there is no problem. But suppose wife has not given a single amount to Mr. X, then courts or act says why you are transferring it? That means you are transferring without adequate consideration. So there is a problem. Or suppose there is no divorce happened between these, so it is without an agreement to live apart between husband and wife. Suppose there has been an agreement between the husband and wife that now we will live separately, and then husband is transferring the property to wife, then it is also genuine, because now husband wants to give surety to his wife that though we will be living separately, but you need a house. So Mr. X transfers to Mrs. X with an agreement to live apart. But if none of these two happens, it is without consideration and without an agreement to live apart, then government thinks that it is nothing but tax evasion. It is nothing but tax evasion. Suppose Mrs. X is in lower income slab, or she is not earning any income, but Mr. X is in higher income slab, or he is earning the highest income, you can say, of 30% rate. So if it is without adequate consideration, without an agreement to live apart, then acts think that the purpose of this Mr. X is to transfer the income to spouse. The purpose is what? Real intention is not to transfer the house, but until unless house was transferred, income could not be transferred. So act thinks that X simply wanted to take the benefits of the loopholes in the law. X knows that under section 22 only owner is taxable. So he wanted to make his wife owner for the remaining 4 months. He wanted that for remaining 4 months X will pay the tax. But no, Income Tax Act says no. If you transfer the property to spouse, when you transfer the property to spouse, other than these two reasons, without adequate consideration, or if without an agreement to live apart, then Act says that your transfer is not genuine and you will continue to pay the tax in spite of the fact that your wife has become the owner. So for this we have section 27, deemed ownership. As the name suggests, deemed ownership. Deemed ownership means where legally the owner might be Mrs. X, but for the purpose of house property, Mr. X will continue to be the owner and Mr. X will pay the tax even if the property is transferred to Mrs. Wife. So deemed ownership, I discussed with you first case, that when the property is transferred to spouse. There are other cases also. You should read section 27 yourself from the act. But I told you the purpose of 27, it is deemed ownership wherever the transfer has been done just to avoid the taxes. So 27. Please raise your hand if 27 is also clear. Remaining is for self-study from the act. Please raise your hands if you have understood 27. Purpose of 27. Now you are mature enough to read it yourself from the act. And last point, then the chapter is completely over and we will be left with only numerical. Fourth point, there are some rental incomes which are tax free. Rental income from properties is exempt. Which are those cases where rental income from properties is totally exempt? Now you can do it from any book or from my book or any material or different provisions of the act. So different sections gives you this. Some of the common examples are rental income of a political party. Rental income of a political party. If political party gives any property on rent, it is totally tax free. Rental income of trade union. Okay, then rental income of local authorities. These are totally tax free. So we have around 9 to 10 examples where the properties rental income from property is tax free. Okay, refer it from any material you are having or any book if you are having, you can refer it from that. So let us wind up the discussion today. That's it. With this, my house property is over. Now, don't do any complete numerical, but read the entire house property. Very soon, I'll be covering this numerical. In 2 to 3 hours, we will wind up the numericals of house property. So that's all from my side. Let us wind up this session. Goodbye.